chapter 4. This is page number 46. Okay, page number 46. So this chapter is going to take us about 1 month's time, a total of 4 lessons. Okay, because there are many things in here. A lot of things I have to explain in detail. So page 46. So you can see on the cover page, this topic is about 2 things: business documents as well as book of primary entry. Okay, you are going to learn what are these 2. Okay, for sure you know what are documents. Okay, I believe the common words to you: business, you know what is business, you know what is document, you know what is books, right? Okay, so we are going to, so these 2 are the major things that you will learn in the chapter 4. Okay, so let's see the first page. Go to the first page, 47. Okay, page 47. Before we get on to see the documents as well as book of primary entry, let's have a look at this flowchart. This flowchart is meant for you to understand the entire process of IGCSE accounting. Okay, throughout this subject, what you are going to see, and I have put it into a nice looking flowchart like this, so that you can understand what you are doing exactly and which type of accounting you are doing exactly when you are doing any topic. So you can see there are a few things here you have gone through. You know what are business transactions. You learn it from the chapter 3. Business transactions are events that happen in business. Buy goods, sell goods, return goods. All these are events in business. You have also looked at the book ledger. The book ledger contains all the T accounts, and all the T accounts have been put into 3 different categories, right? The sales ledger, the purchases ledger, as well as the nominal ledger, right? Okay, you learn it in chapter 3 also. If you go to your textbook, I don't think you will see a flowchart like this. Okay, I have seen all the textbook for IGCSE accounting, but you will not see a flowchart like this. But I think this flowchart is important so that you know what exactly you are doing, so that you can see the entire picture. Okay, so that you can learn the subject more meaningfully. And then you have also gone through financial statements with me. You learn it in chapter 2 of my materials. The income statement, the SOFP. Okay, don't care about the pictures here. You removed it, okay? The KLCC and iPhone, okay, remove it. Okay, and then, yeah, those are the things you have seen. And for chapter 4, we are going to focus on the step 2 and 3. Okay, we are going to focus on the step 2 and 3. So step 2, you have the business document, or you call it as source document. Still remember, whenever you see the slash indicates synonym. Okay, slash indicates synonym. So you can call the documents as business documents, or you call them as source documents. Okay, so what exactly are documents? Okay, write down with me. They are the evidence. Okay, write down, okay, somewhere around it, evidence of transaction. Okay, write in short form, yeah, evidence of transaction. So basically, the purpose of documents is to let you know what have happened. Okay, what have happened. So when you buy goods, you must have document. When you sell goods, you must have document. When customer return goods back to us, we also must have document. Okay, so documents are the evidence of transactions. Okay, and with the documents, you can start to do your accounting. Okay, you can start to do your accounting. And we are going to start with book of primary entry. Okay, book of primary entry, you can see this as the starting point. The starting point in accounting. Because later on, when you see the definition for this term, book of primary entry, the definition, the first few terms tell you is the first set of books, first set of accounting books. Okay, the first set of accounting books. Okay, that means that's the starting point. Okay, when you have documents, you record into books of primary entry first. Okay, so that's the starting point. Then only you will bring some numbers. You will bring some numbers into the ledger. Okay, which contains all the T accounts. Okay, so you are also going to see the relationship between book of prime entry and ledger, you have to learn how to bring some numbers into the T accounts. Okay, so I will bridge everything together. Okay, I will help you bridge the step 2, step 3, and step 4 together. Documents, record into books of prime entry, then bring some numbers into T accounts. Okay, that's how they are linked together. So maybe you have a question. Why don't I start with the step 1, then step 2, then step 3, and then teach you in order? Because I have my reason. Because you have to know your destination first. Okay, I taught you this income statement and SOFP in chapter 2. Why? Because I want you to know where is the destination. These are the final products of accounting. Income statement and SOFP are the final products of accounting. So that if you know the destination, when you go through the earlier steps, it would be more meaningful. It would be more meaningful. Okay, if you know where is your destination. Just like in life, you have to know what you want to achieve, right? So you have to pick up all the bits and pieces from all the steps so that you can achieve the destination. And the reason I taught you the ledger in advance is because you must know the debiting and crediting concept first. That's very important. Okay. Therefore, you have the income statement and SOIP in chapter 2. You learn about the T accounts, debit and crediting, those things in chapter 3. Okay, those are the foundation. Okay, and then I also have to know what are transactions, right? Okay, so like I said, this chapter we focus on the step 2 and step 3, the documents and the book of prime entry. So book of prime entry, there are 7 in total. We are going to look at what they are. How to remember that there are 7 books of prime entry? Look at the rainbow. Okay, in primary school, you learn that the rainbow has 7 colors. You learn it in standard 4. Okay, science subject, the rainbow has 7 colors. Okay, so think of the rainbow, think of book of prime entry, so that you remember that there are 7 books of prime entry. Okay, 1, 2, 3, 4, 5, 6, 7. Okay. If you look at the picture, you count it one by one, there are 7 books here. I got this picture from online. Okay. Okay, now what about the rest of the steps? So follow me. Trial balance, you will learn in chapter 5 of my material. And then these few topics, you will learn it in chapter 6, chapter 7, chapter 8, chapter 11, chapter 10, chapter 9, chapter 16. Okay, so a lot more to go. Okay, a lot more to go. We still need a lot of months to complete the syllabus, but don't worry, your exam is in 2023 for most of you. Therefore, we still have time. Okay, let's look at the second half of the page. So focus, yeah, we are doing documents and books of prime entry in this chapter. So second half of the page, you see another flow chart, right? And there are 6 blanks here, 6 blanks here. You fill up the blanks together with me. You write cash, continue. Okay, continue, follow me and write these 6 blanks represent 6 documents. Okay, all the terms that you are writing right now with me, they are the documents. Okay, there are 6 documents here, but they are not just 6. You will see about 10 to 11 number of documents throughout this topic. Okay, in this chapter, you are going to see about around 11 number of documents. But these are the 6 main documents, which means these 6 documents, they are more important. They come out more often in the exam. Okay, these 6 documents are the main ones. Okay, last one is official receipt, yeah, CEIPT. Okay, when you're done writing, please let me know done. Then we move on together. I will explain this flowchart to you. Okay, good, Punkit. Good, Naima. Okay, good, patient. Okay, good, Jason. Okay, good, Annabelle. Now continue. So I'm going to explain every document to you, but before that, let me tell you what are the things you have to know for each and every document. Number one, okay, continue to write. You must first remember, all the name of the documents. Okay, you must remember all the names of the documents because sometimes in paper 2, they may ask you for the name of the document. Okay, they tell you the transaction, then they ask you what document will give you this transaction. Okay, therefore, you must remember the names of the documents. Never expect them to give you options to choose. Secondly, you have to know their purposes. Okay, every document's purpose, you must know what they are, or you call it the function. Okay, purpose, or you call it function. Number 3, you have to know for every document, they are sent by whom to whom. Okay, sent by whom to whom, whether the document is sent by customers or supplier, or the other way around from supplier to customer. Okay, remember the name, know the purpose, know who sends each document to whom. Number 4, you also have to know documents that you are looking at, whether you have to record or not, need to record or not. Okay, some documents you don't have to record. Later I tell you what they are. Number 5, once you have known whether you have to record a certain document, you have to know where to record. So you continue to write where to record. Where means which board or prime entry. Okay, BOPE stands for board or prime entry, yeah. But don't write BOPE in the exam. For my notes, I write BOPE, it stands for board or prime entry. So where means which board or prime entry to use. So where to record. Okay. Once you have known whether you have to record a certain document, you have to know where to record. Number 6, how to record. Okay, so for every document you see, you must know these 6 things: their functions, their name, sent by whom to whom, need to record or not, if yes, where to record, if yes, how to record. Okay. Now, before I walk through the documents with you, the flow chart, look at the top right corner. We have a few short forms here, which I'm using in the flow chart. S, the alphabet S stands for supplier. Alphabet C stands for customer. Okay, S stands for supplier, C stands for customer. You should know what they are already. Okay, you see these 2 words very, very often throughout the whole subject. Okay, since the first chapter until now. Okay, S stands for supplier, C stands for customer, T stands for transaction. And later on, we are also going to use the 2 symbols here to put next to the document to indicate whether you have to record them or not. Okay, we are going to use the green tick and the red cross. We put them next to each and every document to indicate whether we have to record them or not. If we have to record, we will put the green cross, sorry, the green tick. If you don't have to record, we will use the red cross. Okay, now look at the first level from the top. Okay, first level of the flowchart. You can see that there is document 1A, document 1B, right? In the middle, you have the word or, right? Okay, that means only one of the documents will appear. Okay, it's either invoice or cash receipt. So what exactly are they? Look at the T. Okay, you look at the T that is below it. Below the cash receipt, you have a T that tells you what the transaction is. C, what is C? C is customer. So C pays when receive goods on the spot. Okay, add these 3 words: on the spot means immediately. Okay, you can also write immediately if you want to. So you know, right? When you sell goods to customer, there are 3 possible situations, which is what you learned in chapter 3. Remember, when you sell goods, there could be 3 possible situations. You may get cash on the spot, you may get check on the spot, or you may sell goods on credit. Agree? Okay. So if you get money from the customer immediately, then it's either cash or check. If you sell goods on credit, it means that customer owes us money. Agree? Okay, come back to here. So if you get the money on the spot, okay, if customers pays immediately, or we call it on the spot, then you will have a document known as cash receipt. Simple. Okay. If customers pay immediately, there will be cash receipt. On another hand, if customer doesn't pay when receive goods, which is under invoice, okay, under invoice. This means what? This means on credit. Okay, we sell goods on credit, or you call it as customer buying goods on credit. So if it's on credit, then you will see a different document. We call it as invoice. Simple. Okay. If you send goods and get money on the spot from customer, we have cash receipt. If customers buy on credit, we will have invoice. Later, we are going to see how exactly they look like. Okay. How does cash receipt look like? How does invoice look like? We are going to learn how to read the document as well. Okay. Don't worry for now. Okay. Next, who sends this document? You follow me, you write S to C. Okay. S to C, indicating supplier send this document to the customer. Okay. Supplier send this document to the customer. So far, understand, yeah? Okay. And that's it for A1. That's it for the A1 document. Because we have sent goods to the customer, we have also collected the money, right? Therefore, here can be considered as ending one. Here can be considered as ending one. End of story, because we have collected the payment. Agree? For 1B, there are more stories to it. The story is longer because customer may return goods and customers may forget to pay, and finally they have to settle the debt. Okay, customers have to settle the debt. Therefore, you see, there are two more or here. Okay, there are two more or here, indicating that there could be either one of three situations that could happen. Either one of three situations that could happen. So if you have pens of different colors, you can do whatever I'm doing here. Okay. When you have more colors in your materials, it's easier to learn. Here you write goods returning. Goods returning event. Okay. Goods returning event, or you call it as goods returning process. Or you call it as goods returning transaction. Meaning this is an event where customer return goods back to us. Okay, customer return goods back to the supplier. And you can see that I have drawn a box that is dotted. Okay, the dotted red color box. There are two documents involved in goods returning. There are a total of two documents involved in goods returning. One is debit note, another is credit note. Okay. Later, I will talk more about goods returning in detail on the next page. Okay, next page we will talk about goods returning process in detail. But for now, just have it in your mind as to what I told you just now. In goods returning, there are two documents. First one is debit note, then credit note. Okay, always. Okay, for goods returning, there are always two documents: debit note and credit note. Looking at the arrow, you should also know that debit note will appear first. Okay, debit note will appear first, and then followed by credit note. Okay, it's always debit note first. Okay, then only followed by credit note. If you want to see the transaction, you see customer return goods. Okay, C return goods, and then the transaction that is under credit note after supplier check the return goods. Imagine that you are the seller. When customer return goods back to us, do we have to check the condition? Of course, right? Okay, we have to check. So for now, just know this. Okay, it's good enough for now. Later, I will explain more about goods returning. So debit note first, then only credit note. Yeah. Okay. Another thing that is possible to happen is customers forgetting to pay. Customers forgetting to pay. So should you continue to wait? Of course, no. We have to remind them, right? Okay, send a kind reminder. Okay, send a kind reminder to the customer. Don't shout at them. Okay, don't scold them. Okay, send a kind reminder by using this document, statement of account. So you see the T that is below it. S reminds C to pay for the invoice. Okay, supplier reminds customer to pay for the invoice. We call it as statement of account. This statement of account we will talk more about it in later pages as well. Okay, for now, just try to recognize the names of these documents and what is happening when you see this document. Okay, next, also go on and write who sends these documents that I have mentioned so far. Debit note, you write C to S. Credit note, you write S to C. Okay, I'll talk more about goods returning later on. Okay, for now, just know this. Okay, just now, for now, you just know this will do. And then statement of account, of course, S to C, because you remind customers to pay, right? There are all kinds of people in this world. Never expect everybody to be perfect. Okay, some people may pay late. Some people may pay early. Some people may pay on time. Okay, all kinds of people in this world. Eventually, they must pay, right? Therefore, all the arrows, they point to this last document 3. We call it as official receipt. So if you are a person who keeps thinking out of the box, maybe you have a question to ask me. What if customer return all the goods? Okay, let's say earlier customers bought 10 units, and then at this stage, customer return all the 10 units. Then does customer has to pay? No, don't have to pay, right? Because all the goods have been returned. Then you would not have this arrow. Okay, but for almost all the questions, they won't return all the goods one, okay? Because they want you to have more questions to do, okay? Therefore, for sure, customers will return just a portion of goods. Therefore, finally, customers must still pay to settle the debt. Therefore, you have this arrow pointing to the official receipt. I believe this is also a document that you are more familiar with, because in real life, you know, right? You know of the word receipt, right? Okay, whenever you buy something, you ask for what? You ask for receipt, right? Okay, so yeah, it's official receipt in English here. When customers who owe us money, they settle the debt, we call it as official receipt. You can also see this as the evidence of payment. Okay, evidence of payment from customer. Okay, sorry, yeah, I know the handwriting is not good. Okay, evidence of payment from customer. So you can see it's written here, C pays for invoice, or you call it as settles invoice, and supplier confirms the payment from C. Okay, acknowledge. Okay, acknowledge payment from C. So who sends this document? Who sends the official receipt? Very obvious here. S to C. Okay, S to C. So you see, among these 6 documents, there is only one document that is sent by customer to supplier, which is debit note. Okay, debit note is sent by customer to supplier, and all other documents here, they are sent by supplier to customer. And the next thing I want to mention is, okay, now let's make use of the green tick and red cross. We put the green tick or the red cross next to each and every document to indicate whether you have to record them or not. Okay, follow me. This one you have to record. 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 Only 4. Okay, 4 of the 6 documents presented here. This one don't record. This one don't record. Okay, of course, I'll explain to you why we don't have to record the 2 documents here. Okay, so why don't we record debit note? Why don't we record statement of account? The debit note, I will explain later, because as I said, I will talk more about goods returning on the next page in detail. For statement of account, let me explain now. Why don't we record statement of account? Because it's just a reminder. Okay, there's no extra event that has occurred. Reminding someone to do something is not an event. Okay, when there is extra buying, if there's additional buying or selling, then only is something that you have to record. Reminding someone to pay is not an event. Okay, there's no extra buying that has occurred. There's no extra selling that has occurred. Therefore, you don't record statement of account. Okay, for debit note, I explained later. Okay, with this, you can do some questions. Let me show you. So go to the question section. Few pages later, have a look at page number 77. Page number 77. You do question 23, then you tell me your choice. Okay, so most of the questions here, they are from workbooks, past exam papers, okay, from many sources. Okay, give you a timer, then you give me answer within the time given here. Give you 10 more seconds, okay? Standard time for MCQ is 2 minutes, but I give you 10 more seconds. Can begin. I wait for your answer. Okay, I see 3 answers here. Good. And then I wait for Annabelle. Okay, 1 minute left. Okay, answer is D. So it's one of the simplest question. Okay, it's quite straightforward. It's one of the simplest questions. So please look carefully. In what order would Samuel and Faisal exchange documents in June? So you have to arrange it in a proper order according to the dates. June 1st, Samuel sold goods on credit. When there is a transaction that's on credit, for sure you will see what document? You will see invoice. So it's either C or D. Some goods were returned. So when it comes to goods returning, you know there are 2 documents. I tell you which one will come first. Debit note will come first, followed by credit note. Therefore, answer is D. Okay, so very simple, very easy. Okay, next. We see, go to the next page, go to the next page. Then, answer 5A. Okay, this is a past exam question that I screenshotted. You give me answers using short form with either A or B. Okay, so you have to give me 4 answers, right? So if you think that all the answers are A, then you give me A. If you think that all the answers are B, then you type B. If you think that the answers are A, then you type A. Okay, so you begin. This one is easy. I give you just a bit of time. 24 seconds. Type all the answers in a row, yeah? Don't type separately. Easier for me to see. Okay, another 15 seconds. Okay, the rest hurry up. Okay, see carefully, yeah. Okay, I wait for Annabelle. Okay, all others have answered. Okay, good. Everyone has answered. Now, which are the answers? Good. Punkit, you have changed it to the correct one. So they ask you who sent each document, right? They ask you who sent each document. You have to know who is Alan, who is Vicky. Otherwise, you would do wrongly. So Alan is supplier, Vicky is customer. Four documents will exchange. Leaves a tick to show who issued each document. Invoice. So if you want to remind yourself who is supplier, then you may do like this, okay? So supplier sends invoice, supplier sends credit note, supplier sends statement of account. Vicky is customer, sends debit note. Okay, AAVA. AAVA. Okay, also super easy question. Okay, no challenge here at all. This is a past exam questions. Okay, so why would such an easy question coming out in the exam? Because after you have learned the entire subject, there are many things to remember. There are many things to remember, really. And therefore, the examiner is betting that you may forget certain things. Okay, therefore, you may still see easy questions. Okay, don't think that all the exam questions are difficult. And they also bet that you may determine wrongly. Okay, you may determine Alan to be customer, and Vicky to be supplier. Okay, so this is easy. These are the answers. Next, you go to the next page. Look at number 6. Then you give me an answer. This one, I give you the standard 2 minutes time. Extra 5 seconds. Okay, can begin. Okay, I wait for one more answer. Okay, the rest have finished. Okay, answer is D. Okay, when you're not sure, have to refer to the notes. Yeah. So answer is D. What has happened? Karim issue invoice. Who sends an invoice? So issue means send. Okay. Credit note and a receipt. Receipt means official receipt. So sends an invoice means Karim is supplier. Okay, suppliers also send credit note, right? Suppliers also send official receipt, right? Therefore, Karim is supplier. So you have to follow it. You have to choose the answer that follow it in sequence. So goods on credit will give you invoice. Receive returns of goods from customer. Karim will send a credit note. Receive the balance due. Then you will send an official receipt. Therefore, answer is D. Okay. Immediate payment from customer, what you will get? You will get cash receipt. Okay, so be careful. Okay, be careful. It's a simple question. Okay, now get back to the notes. We go and learn more. We go and learn more things. Then we go to the questions again. So that's my style. Okay, now go to page 48. Go to page 48. Upper page. Okay, upper page of 48. Here we are going to see goods returning process in detail. Goods returning process, or you call it goods returning transaction, up to you. Okay, process, event, transaction. Okay, mean the same thing. So who would know that there will be goods returning? Who is the first person who would know that there will be goods returning? Customer, right? Okay, of course, it's the customer who starts this process. You think of this goods returning having 2 stages. Okay, first stage and second stage. Okay, see it as having 2 stages. For the first stage, customers would send the goods to be returned. along with a debit note to the supplier. Okay, the first round of goods returning, you will see customers send both the goods to be returned and also the debit note to the supplier. Okay, so you should understand why, right? Okay, so this one you should understand because customer want to return goods, right? So customers send the goods to be returned. So what is the purpose of debit note? Let me tell you the reason. If there's no debit note here, the supplier would assume that the customers would like to return the goods voluntarily without asking for a refund. Okay, let me repeat here. If there's no debit note here, the supplier can actually assume that the customers is returning the goods voluntarily without asking for refund. Okay, so therefore, customers have to send a debit note to request for reduction from supplier. Okay, you may write here request for reduction from supplier in the previously received invoice. Okay, why I call it as previously received invoice? Because previously what happened? Before the goods returning, previously what happened? You have the 1B document, right? Okay, see the arrow, then you would know, then you will understand. Before that, you have invoice indicating customer buying goods on credit. Okay, and then here is the goods returning. So the purpose of debit note is to let the suppliers know that please, okay, so the customer is telling the supplier that please help me to reduce an amount from the earlier invoice. Because some goods have been returned, right? A portion of goods have been returned, right? Therefore, customers should owe less, agree? Therefore, you have to make this request. Okay, customer have to make this request so that customers will owe less. Okay, so that customers will owe less after the goods returning. It's a request, yeah. So you can see that the amount $30 is here. Basically, what customers is doing here is customer is requesting from the supplier to reduce the amount owed in the earlier invoice. Okay, and it's $30 here. So what is the $30 about here? The $30 is probably the value of goods returned. Okay, probably the goods that have been returned are worth $30. Therefore, customer is now requesting for a $30 reduction in the earlier invoice. Okay, so to make you understand better, you may write this value of goods returned. Okay, that's the value of goods returned. Logic, right? Logical, right? Okay. So when there's a request, there must be a reply, right? When there's a request, there must be a reply. So the stage two, it deals with the supplier. Supplier will receive the goods and the debit note, right? Okay, DN stands for debit note. After that, the supplier has to check the goods condition. Why? Why do you have to check the goods condition? Let me talk about an example in real life. Let's say you open a shop known as Switch. Okay, do you know what Switch shop sells? They sell Apple products, right? Let's say one day you sold an iPhone to a customer. You sold an iPhone to a customer. Then few days later, the customer returned the iPhone back to us because there's some problem. Okay, there's some problem with the iPhone. Therefore, the customer returned the iPhone back to us. Okay, so do you have to check the condition of the phone? Yes, right. Okay, to verify whatever customer said to us is correct. Okay, whatever problem the customers describe to us about the phone, we have to check it, right? So therefore, you have to check the goods condition. Okay, whenever customer return back the goods. Then supplier sends a credit note. You always see the credit note. You have to always see the credit note as a reply to the debit note. Credit note is a reply to the debit note. You see, to confirm, okay, to confirm the amount that can be allowed to be deducted in the previously issued invoice. Okay, so it's a reply to the customer telling the customer that how much can be deducted in the earlier invoice. You can see that the amount here is $28. Why is it less than 30? I have to tell you the reason. Okay, so the amount request to be deducted is $30, but the supplier say only $28 can be deducted. Why? Okay, let me tell you some possible reasons. You imagine that you are the switch owner again. Okay, you are the owner of a switch shop, okay, which sells Apple products. So let's talk about the customer who returned the iPhone back to us just now. Do you think that the plastic packaging is still there? The plastic packaging of the iPhone, do you think it will still be there when you receive the iPhone back from the customer? Yes or no? You tell me in the chat box. Of course, no, right? Okay. With the plastic packaging, would the customer be able to open the phone? No, right? Okay. So when we have received the iPhone back from the customer, we have to repackage it again, right? We have to repackage it again with plastic so that it looks new again, so that when there's another customer who comes to buy, we can sell that iPhone to another customer. Agree? So do you think that the repackaging would cost you money? Yes, right. So yeah, that's one possible reason why the amount allowed to be deducted is less than the amount requested. Reason is you may have to repackage it because it will cost you money. Okay, therefore you have to spend maybe $1 or $2 for this thing. So you may write down here possible reason, repackaging. Okay, repackaging. Okay, because the seller has to repackage it again to sell to other customer. Okay, of course, repair first. Okay, if there's really a problem, repair the phone first, then repackage it, then sell to other customer. Logical, yeah. Okay, therefore you have credit note. Okay, conclusion is there are two stages to goods returning process. Customer will send debit note first, then supplier will send a credit note to confirm how much can be deducted. When it comes to accounting, do you think that you will record $30 or $28? The $28 is the confirmed amount that can be deducted. Okay, the $28 is confirmed to be deducted. The $30 is just a requested amount to be deducted, right? Requested amount. We are not sure we can deduct the $30 yet or not, right? Therefore, we don't have to record debit note. You think it makes sense? I told you, right? We don't record debit note. And now you know the reason. Because the $30, we are not sure whether we can deduct or not when you have the debit note. When a credit note has been sent by supplier, we know how much can be deducted for sure. So you see the last line here. For goods returning process, GRP stand for goods returning process. Both sellers and customers, both supplier and customer, would record the returns based on the credit note only, not debit note. Therefore, nobody would record a debit note. Nobody would record the debit note in this goods returning. Everybody will record the credit note only because the amount in the credit note is the one that can be deducted. Okay, so this is goods returning. Let's see some questions. Yeah, finish. These are the details for goods returning. Make sure you understand the ins and outs, okay? Because the examiner, they like to ask you on this thing. If you want to, you draw a few stars here. It's very important, okay? Goods returning. Let's see some questions. You have a question, you have asked me, yeah, if you have a question. We see some questions. You may come to page number 76. Try 21. Try 21. Then you tell me your choice. For this one, I give you the standard timer, standard timing for MCQ. 2 minutes, give you extra 10 seconds. Okay, use your calculator, yeah. Remember to bring calculator for accounting exam. If you're not sure what is this, let me tell you, this is improper fraction. Okay. I wait for your answer. Okay, starting to see some answers. One choose B, one choose C, one choose D. I think someone will choose A later. Okay, time's up. I know this is a bit challenging. Okay, nobody choose A. Two of you choose B, two of you choose C, one choose donkey. Okay, never mind. I show you. So let me remind you one thing. It's about the trade discount. It's about the trade discount and the relationship of it with the returning of goods. So if you can recall what we learned in chapter 3, there was one question which I explained with a scenario about customer returning goods back to us. Initially, we sell goods and then we give the customer 100% trade discount. Remember that example? And with the trade discount 100%, it means that customers don't have to pay, right? Few days later, customer return all the goods back to us. Do we have to refund the customer? No, right? Because if you refund the customer, then we make a loss, right? Because we have to apply the earlier trade discount of 10% as well when customer return goods in order for it to make it fair to the supplier. Get the idea? And that explanation is to this question. For the 6th of August, remember, we don't take the $50. We don't take the $50. We have to deduct the 20% trade discount. Why? In order to make it fair to the supplier. Okay? So therefore, this question is something similar. At the buying and selling stage, there is a 33 and 1/3% of trade discount. Therefore, when it comes to goods returning, you must also apply the same trade discount. Okay, so they ask you what is the amount of credit note to be issued. They're asking you what amount should appear in the credit note. What amount should appear in the credit note? Credit note has got to do with goods returning, right? There are only 4 goods returned. There are only 4 units returned. You don't care about the 25. Don't care about the 25. You can take the 4 times 12 because 12 pounds each. So 4 units times 12 pounds. Then you will get the original price. Okay. Then you deduct the 33 and 1/3%. Deduct the 23 and 1/3%. You can do a shortcut here. 1 minus sorry, not 1, okay, 100. 100 minus 33 and 1/3%, then you will get the final answer. Okay, with this calculation, you can get the final answer. I show you an alternative way later. So you follow this. If you want to change your answer, you tell me. I'm also doing the calculation. I found it to be 32. Okay, let me show you another way. This is a shortcut again. This is a shortcut of deducting the 33 and 1/3%. You can also do it this way. Okay, 4 times 12. Then you multiply it with the trade discount first. Okay, the trade discount percentage. Then you found it to be A. Then you take 4 times 12 minus the A. Then you will get the same answer, 32. You know what I'm doing, right? I'm trying to find the value of the goods returned. I'm trying to find the value of the goods returning. The value of the goods returned. I take 4 times 12. That's the value of goods returned. 4 times 12, I get the value of goods returned. But since at the buying stage there is trade discount, I must also deduct the trade discount. Therefore, answer is D. Okay, that means one of you got it correct. Okay, never mind. Okay, the rest you learn from it. So would you get the same answer, 32? You can check. Let me calculate again. Yeah, I got the same figure, 32. It's a past exam question, okay? So you may redo again to test if you really understand it. Now we see the next question. Okay, go to the next page. Now you try for me. Question 24. This one is easy. This one I give you just 1 minute. Okay, wait for your answer. Okay, wait for Jason and Annabelle. Okay, time's up. Answer is A. Okay, answer is A. Again, a very straightforward question. Debit note. What about debit note is correct? Look at the C and D first. Do we ever have to record a debit note? No, right? We never have to record a debit note. Both the supplier and customer record the returning of goods based on the credit note only. Nobody would ever record a debit note. Therefore, C and D are for sure wrong. Okay, D and C are for sure wrong. C and D are for sure wrong. Okay. This is sent by customer, right? Sent by customer to supplier. So send to the supplier to request a reduction in the amount of an invoice. Exactly the same as what I show you in the notes. No difference at all. Of course, answer is A. Okay, super easy question. So look carefully. Send to customer for sure is wrong because it's sent by customer to supplier. Okay, the B is telling you that it's sent by supplier to customer. So B is wrong. Answer is A. Continue. Come to this page. This time you have a theory question, okay, which you have to write your answers in words. Okay, type your answers in word in the chat box. Okay, 2A1 and 2A2. Can begin. 2A1 and 2A2. Give me two answers. Timer, I give you 1 minute and 30 seconds. Okay, I need two more answers. Okay, wait for Jason and Annabelle. Okay, time's up. Let's discuss. When we use the word debit, debit means left-hand side. Okay, debit means left-hand side of the T account. Credit means right-hand side of the T account. They are not the names of the documents. Okay, we have learned only 6 documents just now, not a lot. Okay, so have to remember them. Okay, later on you will see more documents. So therefore, answers: she returned 40 goods to a supplier, Limpo Limited. No, I want to see answers from Jason as well. Okay, I wait for Jason. Because when it comes to, no problem, Annabelle. So let's wait for Jason. Okay, not too sure any of some of you who are here are paying attention or not. Debit and credit are not documents. Okay, just a few seconds ago I said debit is not document, credit is not document, but Jason still give me those answers. But never mind, I discuss now. Return 40 goods to a supplier, Limpo Limited. So Limpo Limited is a supplier. Okay, Limpo Limited is a supplier. Name the document which Limpo Limited issued to Shawa. So they're asking you what document Limpo Limited will send to Shawa. When the goods were supplied, means sell goods. Okay, sell goods, and it's invoice. I know they don't have the term on credit here, right? They don't have the term here. They don't have the term on credit here, right? But when there is goods returning, for sure earlier they must be selling goods on credit. Therefore, you have to write invoice here. When the goods were returned, what document will the supplier send? Credit note. Just now we went through the names of the 6 documents, right? And you can see very obviously here they're asking for documents. Of course, your answer must be one of the 6 names that I went through with you just now. Do you see debit here? Do you see the single word debit here? Do you see the single word credit here? No. Okay. Okay. Now continue. Go back to the notes. We go learn more things. We go learn more things. Page 48. Come to page 48. So just now we went through the 6 main documents, okay, the 6 main documents, but I've yet to show you how they look like, right? Later we will see, okay? Later we will see how each and every document looks like, and how to read them. But before that, so just now we also went through the goods returning process in detail. And before we have looked at all the documents, how they look like and how to read the documents, now let's understand what are the 7 books of prime entry. So think of the rainbow, think of book of prime entry. There are 7 books of prime entry. Synonym is book of original entry. Book of prime entry means the same as book of original entry. So I told you what is book of prime entry is the starting point of recording in accounting, the starting point of doing accounting. So you can see the first set of accounting books, okay, into which accounting records are made based on source documents. Basically, it's telling you that when you have documents, you record into books of prime entry. Simple, okay? So if you are asked for definition, this is what you have to write. Okay, this is what you have to write when you write the definition. Key terms you must have this first set of accounting books, and then you must also have this based on source documents. Okay, if they ask you what is book of prime entry, you write this. It is always this answer. Okay, no other answers. So for safety purposes, I would suggest that you follow the entire sentence word for word. Okay, when you're asked for definition. So 7 books of prime entry. Why do you need to have 7? Why not just one? Simpler, right? Okay, just learn one book of prime entry. So what is the reason you need to have 7? Look at the bottom of the table. Number 1, you see, in business, you have many types of transactions, right? Sometimes you sell goods, sometimes you buy goods, sometimes customer return goods, sometimes you make payments, sometimes you receive money, and so on, right? If you put everything into one single book of prime entry, assume that there's just one book of prime entry, it's going to be what we call it messy, right? It's going to be messy, right? Because there's so many things in one book, and yeah, it's not organized. Yeah, that's the right word, not organized. Okay, so if with the 7 books of prime entry, for the same kind of transaction, you can record into one book of prime entry. Maybe for another kind of transaction, you record it into another book of prime entry. You see the logic okay, you see the logic behind it. So you see the first reason to record different types of transactions into different books of prime entry. You can write next to it with the word organize. Okay, everything would look more organized when you categorize them. Okay, don't you think so? Reason number 2, to divide the task of managing different books of prime entry among different staffs. Okay, let me explain what this is. When you have a big business, quite likely that you will have more than one accountant. Okay, when you have a big business, one accountant is for sure not enough. So if you have all the transactions categorized into 7 books of prime entry, it would make the allocation of work easier as well. Okay, the allocation of tasks easier among the staff. Therefore, you have this reason. Okay, easier to divide the task among the different staff in managing different book of prime entry. Reason number 3, this one I will explain later. Okay, this one I'll explain later. To reduce number of entries in the ledger. Okay, this one I'll explain later. So do expect the examiner to ask you why as well. Okay, they may ask you, why do you need to have 7 books of prime entry? Why do you need to have books of prime entry? So these are the answers. Okay, okay. Let's look at what they are. What are the 7 books of prime entry? Number 1, number 2, number 3, number 4, number 5, number 6, number 7. Now we are just trying to learn what are the names, okay? And yeah, the same goes to this, just like documents. Documents, I told you to remember the names, right? The names of documents you must remember. And the same goes to book of prime entry. You must remember all the 7 names of the book of prime entry. Because sometimes you may see questions like this. You see? This is a past exam question. We will do this later, okay? Later on. If you do not know, if you do not remember the name of documents, you cannot do this. If you do not remember the names of book of prime entry, you cannot do this as well. See, that's why I told you you have to remember the names of documents. You also have to remember the names of the book of prime entry. Okay, now let's look at what are the 7 book of prime entry. Go to the notes. Okay, look at the first one. You have sales journal, or you call it as sales table, synonym. Okay, synonym. Sales journal means the same as sales table. Function of it. So write down together with me. Usually, the table like this, I keep it empty. Okay, I mean last time I keep this table entirely empty, but I found that it's too time consuming to write a lot of things. Therefore, I have the first column from the left fill up for you. Okay, the names of the symbol of prime entry. For now, you just have to fill up the last 2 columns. So follow me and write. Here you write to record credit sales of goods. Also means sell goods on credit. That means when you sell goods on credit, you record into sales journal. Okay, when you sell goods on credit, you record into sales journal, or you call it as sales table. After you have written this line, you tell me in the chat box what document would give you this transaction. What document will give you this transaction? Okay, so you answer in the chat box once you have written the function. Okay, I see 1 answer. Okay, I wait for 5 more answers. Okay, let me repeat the question. What document will give you this transaction so that you can record into the sales journal? I give you 10 seconds. We learned it earlier. Okay, we learned this earlier. Okay, time's up. Answer is, okay, I wait for Annabelle's answer before I give you the answer. Invoice, correct, good. So answer is invoice. But don't write that first, okay? Don't write that first. You have to add the word in front of the word invoice. You follow me. You write sales invoice. Okay, have the word sales in front of the invoice. Okay. Let me explain why do you call it as sales invoice? Because we are the supplier. When you are recording into sales journal, it indicates that we are the supplier. Invoice is a piece of paper, okay? Invoice is a piece of paper, but when we are the supplier, we call it as sales invoice. When we are the customer, we call it as purchases invoice. But don't think that sales invoice is one paper, purchases invoice is another paper. It's the same paper. Okay, it's the same document. But from supplier's point of view, we call it as sales invoice. From customer's point of view, we call it as purchases invoice. Okay, so yeah, that's how you describe it. So write sales invoice. Number 2, Second book of prime entry, sale return journal, also called as sale return daybook, synonym. Again, we are supplier. So how do you use the book of prime entry? How do you use this? Okay, continue. Write with me. You write to record returns of goods from customers. Okay, after that, you know that you have to answer what is the document. Okay, what document will you use to record into sales return journal? What document will give you this transaction so that you can record into the sales journal, sales return journal? So you have to recall what document is involved. Okay, so I saw three answers. Good. The three people who answered, yeah, correct. Credit note. Okay, credit note. Don't write debit note. Okay, don't write debit note because we never record debit note. So you write credit note. Okay, you see why I leave some space at the back. You have to write it as credit note issue. Okay, so kind of like the explanation that I did for the sales invoice. Why we call it as sales invoice? Because we are supplier. Why we call the credit note as credit note issue? Because we are the supplier. But it's the same piece of paper. From supplier's point of view, we call it as credit note issue. From customer's point of view, we call it as credit note receive. Okay. Now next book of prime entry. Purchases journal, or we call it as purchases table. Function, let's write together. To record okay, I make it smaller because I think it still fit into the space here. Okay, to record credit purchases of goods, or you call it as buy goods on credit. If you don't have enough space, you can actually draw an arrow to outside the table, okay, and then you write somewhere else. Okay, next. Yeah, correct. Tell me the document that will give you this transaction so that you can record into the sales journal. Sorry, the purchase journal. So, anybody? What do you think I will write here? What document will give you this transaction so that you can record into the purchases journal? Okay, purchases invoice. Okay, I saw two answers. Purchases invoice. So is purchases invoice the same piece of paper as sales invoice? Yes. But when you are the customer, we call it as purchases invoice. Okay, so write purchases invoice. Okay, next, purchases return journal. Again, we are the customer. This time, we return goods back to the supplier. Okay, so you write to record return of goods back to the supplier. So don't have to answer. I know you would know what is the answer here. This is credit note receipt. This is credit note receipt. Credit note receipt. Again, it's the same piece of paper as credit note issue, okay? But from customer's point of view, we call it as credit note receipt. From supplier's point of view, we call it as credit note issue. Don't write debit note, yeah. Don't write debit note. We never record debit note. And one thing I want you to know is that notice the word goods. Okay, you know what are goods? Goods are inventory. things that you buy and sell in the business, things that you buy and sell in the business. And I think I've explained to you before, goods are not NCA, right? Okay, I keep emphasizing that they are different. Okay, they are different. You have to know the definition of NCA. NCA are the things you keep and use in your business. You keep and use in your business. You don't intend to sell, okay? Keep and use in business. You don't intend to sell. Goods are the things that you buy and sell regularly, okay? In your business. Buy and sell regularly in your business. You don't keep them, okay? You buy and sell to make money, right? You buy and sell to make profit. Agree? Okay. So if you talk about NCA, okay, let's say you buy NCA on credit. You buy NCA on credit. Let's say furniture. Okay, we buy furniture on credit. Can you record into purchases journal? No. Okay, so let me repeat. Yeah, if you buy NCA on credit, you cannot record into purchases journal. So maybe you could be thinking, buy, right? Why don't we choose purchases journal? Since purchases means buy. No. Okay, purchase journal, it has its specific function. It is to record credit purchases of goods only, not NCA. Okay, so it's also a common mistake made by students, common misunderstanding in students. Okay, they think that when you buy things, then you can record into it purchases journal. When you sell things, then you can record into the sales journal. No. Okay, it must be goods. It must be goods. Okay, and then for sales journal and purchase journal, also notice must be on credit. Must be on credit. Punkit, good question. I'll tell you later, okay? NCA record where? Okay, I'll tell you. Okay, now we still have a few books of primary 3, right? Then must be somewhere maybe in 5th, 6th, or 7th book of primary 3. We will see. So cash book is the next thing you are looking at here. Cash book, see this as the combination of cash account and bank account. See this as the combination of cash account and bank account. You know cash account, right? You know bank account, right? You learn it in chapter 3 in my material. If you receive cash, you debit cash. If you receive check, you debit bank. If you pay with cash, you credit cash. If you pay with check, you credit bank, right? You must be familiar with this for now. Therefore, the function of it, let's write together. Those who have learned cash book with your school, you should know how does it look like, right? It's a big table. It's a big table with a lot of columns. We will do one sample together next time. So you write to record the receipts and payments of money. The word receipts here is not the document, yeah. The word receipts here refers to the money that you receive. Payments means the money that you pay. Cash book and petty cash book quite confusing. Okay, no worries. They are super easy. Okay, petty cash is one of the easiest thing, okay, in this subject. And also cash book. Cash book is easy to do. Okay, I will guide all of you through a few questions. For now, let's just learn the various book of primary. So to record receipts and payments of money, it means when you receive money, either in the form of cash or check, when you make payment of money, either in the form of cash or check, you use the cash book. Okay, use the cash book to record. What document? Okay, let me tell you what are the documents. You write with me. There are a few documents here. You write down. You write official receipt. Official receipt is the evidence of payment, right? The evidence of payment. So therefore, you can use official receipt to record into cash book. There are two more documents that can be used. They are check, okay, and also check counter for you. For now, just accept this, okay? I will tell you what is check counter for you in the future. Check counter for you is a document that many students, they overlook. Okay, that means when they revise the subject, they would miss this check counter for you. But it's within the syllabus check counter for you. I'll tell you what is this in the future. Maybe I tell you now. I tell you a bit about check counter for you. But when we come to that page, I will explain more again for check counter for you. You know a checkbook, right? Checkbook looks something like this. Whenever you have written a check, you tear off the paper and give to somebody, right? Okay. And then eventually you will be left with this part, right? This is check counter for you. Okay. This part is check counter for you. Okay. So we will see this document when we come to this page in the future. So something that many students tend to miss, that the examiner would like to test them. Okay. When check counter for you comes out in the exam, many students, they do not know that what is this. Okay. They do not know what document is this because they seldom see questions on this. Okay, so more on check counter for you in the future. I will talk more about it. Okay, so official receipt, check, or check counter for you. These three documents are recorded into cash book. Okay, petty cash book. So how is this different from cash book? Petty means small. Petty means small, right? Okay, if you look into the dictionary, petty means small. So what does small cash book mean? Small cash book means the value that you deal with in the petty cash book must be smaller. Okay, all the amounts that you record into the petty cash book will be smaller. Okay, this one you will learn in chapter 5. I will teach you this in chapter 5 of my material. Okay, for now, write together with me the function and also the document. We will look into this in chapter 5. Okay, now write together to record. Sorry, left out a word. To record business expenses that are small in amount. Okay, and then the document, you write together with me. Those who have learned petty cash book with your school, I can quite guarantee that you may not know that this document exists. It's known as petty cash voucher. It's within the syllabus, but many students, they are not aware that it exists. Petty cash voucher. Okay, more on this in chapter 5. Okay, I'll teach you petty cash book in chapter 5. Okay, so I've gone through the 6 book of parliamentary. Last one is general journal. So you see the slash here, right? Slash journal. So single word journal only refers to general journal. Okay, when I use the word journal, it means general journal. That means you cannot call the sales journal as journal. Okay, it's very misunderstanding because the synonym of general journal is journal. Therefore, you cannot use the single word journal referring to other book of parliamentary. Okay, so don't call sales journal as journal. Don't call sales return journal as journal because the single word journal is referring to general journal only. Okay, so this is something you have to know. So what is the function of it? Let's write down together. Write down together function of general journal. Again, now we are trying to recognize the names and the functions of them. Okay. Later on, we will see how each and every book of parliamentary look like and how do we record into each and every book of parliamentary. As you can see on the next page, we will see sales journal, sales return journal, purchase journal, purchase return journal, sample of general journal, or you call it journal, sample of cash book. Okay, we will go through all this one by one, also do the related questions together. For now, just try to remember the names and their functions. Okay, so last one, let's write together. Not much time left. You write to record other transactions Remember, yeah, these are 7 books of prime entry, okay? In other books of prime entry. Okay. Later, I let you know how to remember what exactly general journal is doing. Okay, I give you an analogy to let you remember very easily what is the function of general journal. So you see what I have written here? To record transactions, that cannot be recorded in other book of prime entry. Okay, so for the documents, it can be any documents. Therefore, you can write not applicable here. It can be any document, depending on what transaction is this that's given in the exam. So don't worry, they will not ask you what document is used to record into general journal. So you write N/A, not applicable, or you put a dash here also fine. Now let me tell you what exactly the function of general journal is. So they tell you that to record other transactions that cannot be recorded in other books of primary, right? So basically it means that if you see a transaction and you cannot record into sales journal, you also cannot record that into the sale return journal, you cannot record in other book of primary, your last choice is general journal. I give you an example. Not just one example. You see at the bottom here, this one. Examples of transactions recorded in the general journal. It's a very popular question in the exam where they ask you what can be recorded into the general journal. So remember a few. Please remember a few. Draw a few star here. Okay, draw a few star here. Buying NCA on credit. Okay, Boon-Kit, now this answers your question. When you buy NCA on credit, you cannot record into the purchaser journal. Okay, you cannot record it into the purchaser journal. You have to record it into the general journal because that's the function of general journal. So buy NCA on credit is one example of the transactions that you can record into the general journal. Can anybody tell me if you buy NCA and you pay immediately with either cash or check, which book or prime entry do you use? If you buy NCA and then you pay immediately with cash or check, which book or prime entry would you use? Okay, everybody, you can try. Choose from the 7 books of prime entry. I buy NCA and I pay immediately with either cash or check. Where do you think I will record into? Which book or prime entry? Pay immediately, yeah. So recall when you pay, when you receive money, where do you record it? My question is which book or prime entry? Which book or prime entry? You will record this into which book or prime entry? I'm not asking for document, okay? Not asking for document. So you must know what are documents, what are book or prime entry. Don't get them mixed up together. Okay, good Jason, correct. Good Boon-Kit, correct. The rest you try. Okay, patient Annabelle Naima, try to give me a different answer. Yeah, patient, correct. Cash book. Okay, so remember, the function of cash book is used to record receipts and payments of money. When you buy NCA and you pay immediately, is that a payment of money? Yes. Therefore, you record into the cash book. I can give you a conclusion here. When you buy NCA, so Boon-Kit, you can see what happens here because you asked me a question about NCA, right? When you buy NCA, if you pay immediately, you record it into the cash book. When you buy NCA on credit, you record it into the general journal, which I'm showing to you here. Okay, the 7 book or primary general journal. Okay, buy NCA on credit. Later, I will tell you how to remember the function of general journal. And then a few more, you see. Drawings of goods also recorded into general journal. Opening entries, or you call it starting a business, also record into the general journal. The last few things you will learn in the future, but they are also in the general journal. This you will learn in chapter 7, chapter 8, chapter 11. Okay, so we'll talk more about this in the future. For now, maybe you just remember the first three: buy NCA on credit, drawings of goods, and then the data entries for starting a business. They all they're recorded in the general journal. I give you one analogy, then we dismiss. Okay. So how can you remember that the general journal is used for other transactions that cannot be recorded in other book or prime entry? So you see, sales journal is meant for recording selling goods on credit, right? Sale return journal, you use it when you have customer returning goods. Purchase journal, you use it when you buy goods on credit. Purchase return journal, you use it when you return goods back to the supplier. You use the cash book when you receive money or make payment of money, right? Petty cash book, we talk about it in the future. General journal, it is a bit special. They tell you that transactions that cannot be recorded in other books or prime entry, you use it. Okay, use general journal. Some examples are here: buying NCA on credit, drawings of goods, and opening entries, or starting a business. You can think of the general journal as, okay, write down together, the last dustbin in a recycling activities. You know what is recycling activities, right? Okay, last dustbin in the recycling activities. So try to think of recycling activities. Would you have a lot of dustbins meant for different types of materials? You could have a dustbin meant for papers. You could have a dustbin meant for glasses. You could have a dustbin meant for aluminum cans. You could have a dustbin meant for electronic goods. Yeah, this is the more advanced bin. Okay, the more advanced bin meant for electronic goods, but we seldom see it though. Papers, glasses, aluminum, electronics. So these are the things that can be categorized. Okay, and for things that you cannot recycle, what do you call it as? Rubbish, right? Things that you cannot recycle, you call it as rubbish. And I also call this as the last dustbin. Because when you are looking at something and you see that it's not paper, then you don't throw it into the paper bin. When you see that it's not glass, you don't throw it into the glass bin. When you see that it's not aluminum material, then you don't throw it into the aluminum bin. And it's also not electronic, therefore you cannot recycle it. You throw it into the last dustbin, which is the rubbish bin. Agree? So general journal, think of it as the rubbish bin, the last dustbin in recycling activities. I think this analogy is quite perfect, okay? So that's what general journal does. The function of it is the last dustbin in the recycling activities. It would accept any transaction that other book or prime entry do not accept. Okay, simple. So for your, yeah, there's no homework. There's no homework. I will walk through the questions with you next week. I let you do in the lesson, then we discuss it question by question. Okay, if you have no question, then we can dismiss. Okay, have a nice day. I will see you for one more lesson before next year. Bye, everyone. Bye. Welcome, everybody.